Hello, Miss Golden Girl here. This is an impromptu pop up. And can you guess what's on my mind? Hey, taxes, taxes. Have you filed your income taxes for 2022? The deadline, it's a little extra days this year, is April 18th, 2023. So you got a few more days to file them or to apply for an extension. But today I just, I did this survey. And I filed my taxes. I like doing taxes, but I haven't done them online. So I still do my taxes, long form. You see that that 1040 form? Hello, thank you for stopping in. I do mine the long way on the form, and then I give it to my daughter, and she prepares it for me online. She does taxes, and she has the software and everything. But what I did yesterday, I sat down and I analyzed my 2023 taxes, what my tax liability will look like. And what I usually do it in January, but I was a little late, but I got it done. So the tax rates have changed. So what you can do if you want to look at your 2023 tax liability and project it out, it's pretty easy if you take the standard deduction. There's some new rates for that, and you can search that and get the standard deduction amount. I'll tell you mine. I file single. And so for 2023, that standard deduction for a single individual is $13,850. And that's an increase from 2022, which the standard deduction for a single was $12,950. So I got my calculations here. That's like a $900 increase. What they have it tied to now is an inflation factor, the standard deduction. And then the additional deduction we get if you're 65 or older, and I'm older than 65, I'll be 72 in July. So that's 1,500. So that's an additional amount if you're 65 and older. So that you add those two together, you take that from your projected income, gross income from 2023, and then you will look at what your tax rate is, the tax table. There's 7 brackets now. Let me get my sheet out here. I'll tell you. And you multiply it times that percentage. There's a 10%, 12%, 22%, 24%. I think the highest one is 37%. Let's see here. Let's see. Okay, so after 24, okay, here's what the percentage are for the tax rates. 10%, 12%, 22%, 24%, 32%, 35%, 37%. And so you can find out what your percentage is, what tax bracket you're in, multiply it, and then that's your tax liability estimated projected for 2023. So what you want to do is, stay on top of that. Stay on top of that. Stay on top of that. What I do is that I look at it normally at the beginning of the year. Then I look at it again around July. And then I'll look at it again in December. So if I got any surprises, I got some time before the deadline in April to get the money together. I've been doing pretty good the last couple of years that I haven't had to pay. And that's because I don't have a lot of extra income. Well, I'm analyzing it. So couple times a year, so that has helped me. Right now I've looked at it and getting my files in order as a content creator on YouTube. I got to keep track of all my expenses, and I like to keep track of them as I go, because so at the end of the year I'm not hunting for things. So I got to really get that together. I got them in a plastic bag. So I want to go on and enter them in a spreadsheet. And I want to copy my receipts. I copy my receipts because, receipts will disintegrate. So I copy my receipts so that I got a good copy that will Oh, hi, destination. I get so bad with these comments. Hi, thank you for stopping by. I'm on here impromptu talking about some taxes today. That's been on my mind. So go ahead and estimate your 2023 tax liability, and so you can have all year to plan accordingly. When you get to be a retiree, you've got sources of income that you're coming in from your deferred savings account, retirement account, your IRAs. Now that's what I really want to talk about. I surveyed a couple friends today because I wanted to see if they're managing, how they're managing their retirement accounts, if they had started to take money out. Have you heard of the required minimum distribution? That's a federal government requirement put on people with retirement accounts, that they have to take a certain amount by a certain age. And they keep upping it. And I'm trying to figure out why. It was age 70. Then during the pandemic, they changed it and it got to be age 72. This year, they changed it. If you wasn't 72 by 2022, you have until age 73. So then today I Googled it and looked at it, and they're eventually changing it to age 75 by 2033, I think it is. But what this article said is more for the people, the rich. They deferred this money, and I took advantage of it too. But they don't need the money, so they don't want to take it out of their accounts. They don't want to be taxed on it. So that's why. And I talked to some of my talked to friends today, asking them had they started to take their money out. And a lot of them hadn't started to take their money out. And some said, they're able to exist off of. Hello, thank you for stopping by. I'm talking taxes today. Just want to remind everyone that the tax deadline is April 18th, 2023. Got a couple extra days from April 15th this year. And then suggesting that you start analyzing and looking at your tax liability for 2023. But as I was saying, I'm what's on my mind today really is to talk about this required minimum distribution from your 401, 457, because this new act that they did to extend the time now to age 73, that changed also about IRAs, Roth IRAs, that's not held to that requirement anymore. So that's interesting. So make sure if you have retirement income and you of age, that you stay abreast of what the new legislation is regarding that. They reduced the penalty from 50% down to 25%. So if for some reason you miss taking your required distribution for that year, the penalty now will be 25%. And I read in this article that you can appeal it, and sometimes they let you get away with the 10%. But me, I am the kind of person, everything is subjective, objective, maybe. Whether you would get that approval is my suggestion is strongly look into when you need to take your required minimum distribution from your 401, 457. Understand how your Roth IRAs are affected by this change in the law. I was saying to one friend of mine, I've been talking about this required minimum distribution and them taking their money from their retirement accounts. I said, ooh, it's going to be a whole lot of money left for family and friends, because I know quite a few people that they just don't want to take that money out of their accounts yet. They don't want to be taxed. And so they're getting up in age. So, but I don't have that issue. I've been retired for 20 years as of January 2003 and drew my first pension check March 2003 from the state of Michigan. So I have exhausted my retirement account. So I don't have that issue. I try to suggest to my friends that they stay on top of their accounts, making sure that stocks are not doing well right now. So I'm suggesting to them, look at their accounts. If you're in your 70s, this is my thoughts, you shouldn't be concerned with growth anymore. I think you should be concerned with maintaining the principle of your account. So you want to be in something less risky, because if you lose money now, you in your 70s, you may not have enough time to recover that money back. So that's my thoughts. But as I was sharing, bye, Destination. Thanks for stopping in. What I as I was explaining to you how I exhausted my retirement accounts, I moved to California in 1992. So then I used my 401 and 457 to fund, my getting established there in California. When I came back, because I went to California without a job, so I had my retirement savings, and I lived off of that till I was able to get a job. And got a job just at the time it was exhausting. I had enough money for about a year to live off of. Then when I came back from California in 1999, I came back without a job. So the retirement that I had accrued with the Sacramento County, I took that down and I lived off of that. Thank you for stopping in, talking taxes. Just want to remind everyone, April 18, 2023 is the deadline to file your 2022 taxes or get an extension. So, and but I'm focusing on also my golden people, my golden people, like me in your golden years, in your 60s, in your 70s. Are you spending your retirement money, or are you leaving it for your children? Do you fall into the situation where you don't need it? You've got enough income, maybe with Social Security and with your, if you have a pension, that you don't need that money. But I want you to beware that the required minimum distribution legislation changed in 2022, affecting 2022, which when they passed it, I guess it affects 2023. But just beware, and you still got some time if you need to take that money out before the tax deadline. If you are age 72 in 2022, then you have to take a required distribution in 2020 for 2022. Now, if you didn't turn 72 in 2022 and you're going to be 72 in 2023, then you have until in 2024 by April then to take your distribution. But go out and verify everything and just make sure that you are taking your required distribution. Stay on top of your retirement accounts. Make sure, nowadays you gotta monitor it, because stocks is not doing well. Where do you have your money? What does your portfolio look like? Don't lose that money. Don't let it just dwindle away. So but yes, I'm just gonna be on here 30 minutes talking about taxes. But I wanted to come on and remind everyone, April 18, 2023 is the deadline to file your 2022 taxes or to apply for an extension. Hello, thank you for stopping in. Talking taxes. If you got something you want to say, share. The big thing is, I'm asking, did a survey and asking friends, are you drawing down from your 401s, from your 457s? Are you drawing down from your Roth IRA accounts? Are you using the income that you've saved over the years? See, I never had a problem with paying the taxes on the money. Of course, I didn't like it, but I knew when I deferred the money that, I got a tax break, and that one day I was going to have to pay the taxes on it. Now, one thing they talked about, when I first got into deferred in the 80s, is that you would possibly be in a lower tax bracket. But some of us has been truly, truly blessed that, hey, we were able to get Social Security. When I first started working in 1975, after graduating college, I was told, don't depend on Social Security. It's not going to be around. So, but I'm blessed that I do have Social Security. And so I want to just say, thank you for stopping in, and anyone that replays this, that you would give it a thumbs up, a like, and share it out. I know it's late, but I wanted to come on live and just talk about it, impromptu. It's on my heart. I just don't want anyone to lose their money in their savings account. They, analyze it. Definitely make sure, see where you have it. Stocks are risky right now. Don't have all that money sitting in stocks. Don't lose your account. Keep that principle of that account intact as much as you can. Make sure you know when you have to take your required minimum distribution from your retirement accounts. Go out, Google it. The legislation changed. The penalty is down from 50% penalty on if you missed your required minimum distribution date to 25%. Now, when they make all these changes, it's for the wealthy. It's not necessarily for the working class people, because if they really wanted to do something to help the working class people, they would change the thresholds for Social Security so it wouldn't be taxable. The threshold for a single person is $25,000 of income. Now, and the way you come up with that figure, you take half of your Social Security, and then you take all of your other income and you add that together. And if you got more than 25,000, then a portion of your Social Security is taxable. The maximum that they will tax the Social Security is 85%. But I think it's wrong. When they made this change, Social Security was not always taxable. It was around in the 80s when they made the change, and it was supposed to be temporary. And they have not changed that threshold. For a married person, I think the threshold for them is like either 32,000 or 34,000. It don't take any time. You married, you put all that income together. And so most people, a lot of people that's got pensions or have retirement accounts, they're paying taxes on their Social Security. A person, they say, that don't is just have the Social Security, chances are that you don't have to pay taxes. If that's all your retirement income is Social Security, more than likely you won't have to pay any taxes. But that's what they need to do. Hello, thank you for stopping in. I'm talking taxes today. Have you filed your taxes? Just want to remind everyone about the deadline is April 18, 2023. And that this is a good time to look at your 2023 tax liability. What I found out that it is really, I don't know what's going on, that employers don't seem to withhold the right amount of money for their employees nowadays. So you need to look at that and make sure that once you estimate what your 2023 tax liability is, that they're withholding the right amount so you can have that at the end of the year. What I like to do is come up with my tax liability, and then I divide that by the number of pay periods. Like if you work somewhere and you get paid 26 times a year, then if your tax liability is $3,000, then divide that by 26 and make sure that that your employer is withholding that amount, so that after 26 pay periods you will have that amount. Take a look at how the tax rates are changing. Here in the United States, I'm happy to live in the United States, but our government could just do a little bit more to help the working class. A lot of countries, they subsidize childcare. They subsidize that. Childcare is very expensive. That's another issue that I have. They lowered rates back, what's allowable now. They had upped it during the pandemic, what you could claim for one child, and then what you could claim as child care expenses for 2 or more children. And it is so not close to what you're paying for child care. I just don't understand that. I just don't understand why they don't make that according to what childcare costs. It doesn't take much. Hello, thank you for stopping in. Just a reminder, tax deadline is April 18, 2023. Have you filed your 2022 taxes? And then I'm suggesting that you estimate your look at your 2023 tax liability. And with most people now with the standard deduction, they take that. So you can look out there and see what the standard deduction is. Deduct that off of your gross income, and then that will be your taxable amount. See what tax table you will fall into. The tax rates are 10, 12, 22, 24, what was it? 32, 35, 37. There's 7 brackets. And then multiply that time that taxable amount, and you'll come up with an estimated tax liability. Hello, thank you for coming in. Have you filed your 2022 taxes? The deadline now this year is April 18. Normally it's April 15. So I'm just on here impromptu. I wanted to talk about taxes. Wanted to remind everyone that the tax deadline date is April 18, 2023. Up a few more additional days than April 15th. Suggesting you look at your 2000 tax liability now. It's easy to check. Make sure you're withholding the amount close to it. You know, there's a penalty if you don't withhold 90% of your tax liabilities. So you want to do that. Make sure you do that. Go out and look at the publication 17 that came out in January. So, you know, it's got summarizes all the new tax changes and everything. The one big change is the required minimum distribution that affects senior citizens, people retired, my age. So, hey, they changed that from age 72 to age 73 if you turn 72 in 2023. So, but yes. All right. Well, I want to thank those that stopped by, and I appreciate any replays. You know, share this out. This is on my heart. It's really on my heart. I just trying to encourage everyone to have retirement accounts, to make sure that you're monitoring your retirement account and make changes. And when you see that balance of your principal of your account going down, make some changes. Don't just let your money stay out there in that stock, and stocks are not doing well now. Change it over. Change your portfolio over into something that's less risky. Don't lose your money. You know, if you're in your 60s, you're in your 70s, you're not like when you're 30 or 40 that you got years that, you know, that could bounce back. My thoughts is that don't lose. I feel this my thoughts at age 65, 70, spend your money and keep it safe. You know, that's my thoughts. You need that money. You want it. Well, you want it. So, you know, it's grown. But that's my thoughts, my opinion. But mine's been exhausted. I only lost $1,000 in my account. Only lost $1,000. And I was still working. I wasn't even drawing. And I had put it into some stock, and that stock sort of plummeted. And I didn't move it out of. I only had a little bit of money in there. I wasn't about high risk when I was saving in my retirement accounts. I was more about making sure my principles stayed intact. So, but I moved it out of that not as quick as I should have. So, in all my time saving, I only lost $1,000 in my retirement accounts, but I just thank God for that. But mine's been exhausted for some time. So, but it served me well. Hello, thank you for stopping in. I'm about to end here, but just a reminder to everyone that the deadline to file the 2022 income taxes is April 18th. So you got a couple more days than from April 15th. And so you could push the replay and play this. I talked about the required minimum distribution. I talked about you estimating your 2023 tax liability. So I'm going to sign off here now. This was an impromptu live that I just wanted to remind everyone about the tax deadline, that you got a couple extra days to file your taxes or either file for an extension. Hey, Jackie. Hopefully you got your taxes done. That's Jackie's out on YouTube. I mean Facebook, my Facebook page. But yes. And I aspire to inspire before I expire. So when things come to my mind, I go out and I ask questions and I research and I come back and I want to share it. Help anybody that I can. I'm not giving any tax advice. I'm not giving any financial advice. I'm just stating some opinions on how I feel about things. And you can take that in consideration and discuss it with your tax preparer. But I just want to bring some things to your forefront so you can plan accordingly. And again, I can't say it enough, is to stay on monitoring your retirement account. Don't just let that money dwindle away. You can move your money. You can move your money out of stock and into bonds or whatever, some type of fund that is safe. But don't you know what's going on with your account? And I'm talking to somebody that already done. Have you done it? Have you gone out there and moved your money and stopped letting it dwindle away? All right, take care. I appreciate thumbs up. I appreciate subscribing to my channel. This is one of my miscellaneous niches. I have 4 niches for my channel: traveling, aging, weight loss journey, and my swimsuit modeling, and then a miscellaneous category that I will do different things under that heading. But I started out with the traveling and the aging, but out of nowhere I accidentally got a swimsuit audience. And so it's about me developing an audience for each one of my niches. And so right now, the swimsuit audience, hi swimsuit, all of y'all are my subscribers. I call you my golden nuggets. I appreciate my golden nuggets. You are very precious to me. So right now I am coming live on Sunday at 10 p.m. and I'm talking about my working vacations in Alaska, in Skagway, Alaska. So I was looking for it, and I don't know what, you go to Alaska, they give you these nuggets, gold nuggets. And so I was trying to find my gold nuggets because I want to put it up. But yeah, I decided to name my family audience Gold Nuggets. You precious to me, Gold Nuggets. So please subscribe, become part of the family. I am a content creator. And I'm excited about it. I started the channel in January 2022, and it's been a year, but my channel has taken off in the last 4 months. So, all right, you have a good night. I'm very passionate. I'm very passionate about all the content that I bring to you. I want to bring good content to you. So stop in, look at my videos, and it is for all ages. It is for all ages. I'm talking about taxes. Everybody got to file their taxes. I'm talking about savings accounts for your retirement. The young, you should be saving for your retirement. I'm talking to my family members, the young ones, to strive for putting into their retirement accounts the max. And it takes time to work up to the max. The way I did it, I started when I got a raise, and we got raised pretty regular annually, mostly, that I would defer that amount of my raise. I just kept myself living off of what I was making at that time and deferred all raises. And before I know it, I was at the max of putting money into my savings account. But you have to have a plan of action in order to get there. Maybe you need to pick up some additional work. But young people, think about your retirement. You probably really won't have Social Security. I was told not to depend on Social Security when I started my career after graduating college. But thank God I do have it. All right. This is tax information, different things that's on my heart. I will come with different times because I aspire to inspire before I expire. So if I can say something to encourage you to go talk to your tax preparer, talk to your financial planner. I did all that for myself. I didn't need a tax accountant. Well, I do taxes. I'm an accountant, but I'm not a tax accountant. But I was able to do taxes. After I took that tax class in college, then I started doing taxes for family members. But far as a financial planner, I've been able to, pretty much handle my own finances. But I enjoy things like that. So had friends to talk to. A shout out to Glenn Robinson and Marvin Harris. They were into the deferred compensation plan before a lot of us, working for the transportation department. So, I would talk to Glenn, and at that time the interest rate would double figures. So, like, just think, if you got 75,000 in your account and you getting a 10% interest, that was some nice amount of money. And especially you got 75,000 in your account and you were getting 10%, that was like $7,500 you was getting in interest. Back in the day, in the 80s, things that was happening. That was really happening. That the interest rate on the retirement accounts were at 10%. And I'll never forget when, for the state of Michigan, we had initially 457, and then when they started offering us 401, before they closed that loophole, I had both of them. I had both of those accounts, and I was putting the max in both of them. But then they closed it, and so they started, you could only, between the two accounts, have a certain amount. But nowadays, you could put more into your retirement accounts than when I was, working. So, but the issue is that a lot of people aren't able or don't take advantage of it. So I want to encourage you to work out a plan where you're striving to put the max into your retirement account, because I have a defined benefit pension, and those have pretty much gone by the wayside. And what's out there now is defined contribution. So you got to manage your own account, and you got to put your money in there. Employers nowadays, if you don't contribute, they not contributing, because you got to put in an amount to get their 3% initially, and so they're getting over on that, because a lot of young people working don't understand that like, hey, you want to at least get your employer share, so you should at least be putting about 4% into your retirement account so you can get their contribution. All right, well, you take care. And again, to anyone replays this, thank you very much. And wanted to remind you that this will be a reminder, if you haven't got your taxes done, you still got some time. All right, good night. Bye.